Hey everyone, Couch Investor back to our Tesla weekly video for today. So in today's video, I'm going to start with numbers out of China, go into Europe, and then talk about the big news that came out during the week, positive and negative as well. And then towards the end, we're going to have a look at the graph. I'll explain a bit my sentiment around the stock going into the earnings report. So first up, the numbers out of China for the first week of 2024. So China reported 3.2 thousand insurance registrations for Tesla, which seems low, of course, on week-over-week basis, but to a start of a new year, it is a pretty good start. Chinese New Year is a bit later this year than previously, so take that into consideration. Now, with regards to the mix, Model 3 and Model Y, Model 3 had 1,019 sales, Model Y 2,163 sales. With regards to Tesla Giga Shanghai, so wholesale numbers here, in December there were 75,805 local sales, 15,750 Model 3s, and 60,055 Model Ys, 80,334 exports, which again, the mix there is 16,231 Model 3s and 2,103 Model Ys. Now with the 31,981 Model 3 sales, wholesale sales, December was a new record, while Model Y is 10% behind the record set back in November 2022. Now, remember, there is going to be a retooling in January for Giga Shanghai, so expect that number to be a bit lower next month. Then moving on to Europe, Piloli writes it here perfectly. So Tesla Model Y was the 2023 best-selling BEV in nearly every country where it is available. Now here he ranks Teslas as compared to cars, all cars, not just BEVs by country. So first place, Denmark, Iceland, Norway, Sweden, Netherlands, Switzerland, and China. Second place, Finland. Fifth place, it was in the United States, UK, and Thailand. United States, it's actually up 4 places. UK down 2 places. In Australia, 6th place. 8th place, Germany and France. Even though we were pretty weak in Germany during that year, we're up 1 spot. In France, pretty good year there, up 29 spots. In Ireland, up 131 spots. 11th place, and Spain 38th place, 60th place. We can do a lot better, I believe, in that market. And then when it comes to a big company, a big competitor, one of my personal favorites is the Audi R8. Always wanted to have one, maybe one day. But here you can see that Audi only sold around 80,000 more vehicles globally than Tesla in 2023. If you look at the graph here, I mean, Tesla is catching up and catching up quite fast. Now, before I continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. We do these Tesla weekly videos on a weekly basis. On Saturday, where I basically recap the most important points that happened with Tesla during that week, so you don't miss anything. If you want to support me even further, do check out the link down in the description and a pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, let's start with some bad news here. Well, not really bad news, but if you read the chatter around socials, it does seem like bad news. It's not incredible news, and that's the price cuts in China that were made for Model 3 and Model Y. So the first one here, Tesla has cut Model 3 prices in China by up to 6%. So the rear-wheel drive is down 6%, the long range down 3.9%. With regards to the Model Y, that's down by up to 2.8%. So rear-wheel drive here down 2.8%, long range 2.1%, and the performance has not changed. Now, if we go and look at this picture right here from Tesla Chan, great follow on X, we can actually see something interesting. By the way, the Model 3 is the new one, of course, is the refreshed model. So a price cut here, which if you look at the long range, the price cut brings us back a bit lower than the price we were at in September of 2023. If you look at the rear-wheel drive, we're now back at prices between May and September. But remember, this is the new model, the refreshed model. So a cheaper price might increase sales. And since this is the new model, I would expect it is a higher margin vehicle for Tesla as well. cost of goods sold continues to decrease, so why not reduce the price here a little bit? Again, we're going back to prices not seen since, 6 months ago? So not that big of a hit in my opinion. Then with regards to Model Y, rear-wheel drive, we're going back to prices not seen since earlier 2023, actually just a year ago. And then with the long-range model, we're going back to prices not seen since August. And here as well, despite not being a refreshed Model Y, which everyone is expecting for it to arrive maybe later in 2024, remains to be seen, Tesla continues to iterate on the models that it makes. Whether it's battery, whether it's production, just because there's no new model doesn't mean that there isn't an improvement in that vehicle. So there you have it. Of course, Wall Street sees price cuts, doesn't like it because, EPS estimates will then go down. But in my opinion, these price cuts are not that big, right? We've seen worse price cuts before. Continued price cuts, maybe this is just a one-time thing, maybe not. If this is the same as we've seen back in 2023 and we see even more price cuts, then yes, it will be a bigger hit on Tesla. Now for the upcoming earnings report, nothing will change, right? Because the quarter is already done. We will see the effects of it in Q1. Now for the upcoming quarter, remember there is going to be a higher mix of sales for S and X, higher ASP, higher margins as well. Now in Q1, remains to be seen what the mix there will be, but there will also be the impacts of the Cybertruck ramping. Remember that. Now moving on to some more positive news. Tesla has now updated its website to show the 7,500 Fed point of sale credit rebate, which basically means if you qualify for this, you get the reduction already at checkout, which should definitely help with sales. Then last thing here with regards to a rumor, there was this picture circling around. Looks like maybe this might be the compact car. I don't know. Could very well be a Model Y without a front there. So yeah, a lot of people have already started speculating. Could this be the new compact car? Is this how it will look like? This looks actually a bit weird if you look at the front of it. But hey, every week is something new to get excited about. Then, the big news that the media ran with is this. Hertz cites weak demand, high damage cost in decision to downsize EV fleet. Now again, we've talked about this, I would call it a lie when it comes to weak demand for EVs, because if that was the case, the Model Y would not have been the best-selling car in 2023. BYD would not be making now more EVs than Teslas, right? If there was no demand, then these companies would feel it. But that's not the case. We've seen the numbers, right? The rankings for Tesla in Europe as well. Clearly, that's not the case. Now, let's continue with the Hertz thing, because Spotted Model here found out that, Hertz currently has 27,721 vehicles for sale. 661 of those are Tesla, so around 2%. 5,394 are Chevrolets, 5,301 are Fords, 2,890 are Nissans, 2,231 are Toyotas. Sales also include Mercedes, Porsche, and many others. So again, this is another case of let's put Tesla in the title so we'll get more clicks and more views. Makes total sense. Now, if we go and look at the report, the release from Hertz, they say here they've made the decision to sell approximately 20,000 electric vehicles from its US fleet, or about 1/3 of the global EV fleet. These vehicles dispositions, which were initiated in December 2023 and are expected to take place in an orderly fashion over the course of 2024, will cover multiple makes and models. EVs held for sale will remain eligible for rental within the company's fleet during the sales process. The company expects to reinvest a portion of the proceeds from the sale of EVs into the purchase of internal combustion engine ICE vehicles to meet customer demand. They continue by saying a bit lower, the company will continue to execute its strategy around EV mobility and offer customers a wide selection of vehicles. Now, if we go back to the earnings call, the most recent earnings call for Hertz, they said this when talking about EV ownership and the engagement, etc. So they say here, and as EV ownership grows, we expect rental demand to grow in tandem, by gaining early competitive knowledge on how to manage a profitable EV rental fleet, we believe we are gaining value and positioning Hertz to ramp efficiently and confidently. Continued by saying here, the share of new electric vehicle sales in the United States is growing, and studies of current EV ownership evidence lower incidence of damage and collision than for ICE vehicles, not higher as we are experiencing. We believe these trends will converge. So clearly here, the problem lies not with the fact that these are EVs. The problem here lies with education. Hertz, being a rental company, should have prepared better for the launch of a huge EV fleet. They should have done it in a couple of steps. They should have educated their clients as well. Because of course, if it's the first time you're renting out an EV, you're not familiar with how fast things accelerate. You're not familiar with how you should maybe recharge that car. Then of course, mistakes will happen, or in this case, accidents. That doesn't mean that the problem lies with the EV. No, again, it lies with the way things have been laid out. Hopefully, they will learn from their mistakes. Of course, this is also a financial thing. Yes, Tesla's price cut is hurting the depreciation here of these vehicles as well. And so Hertz is taking a hit here. That's a shame. But overall, the headlines, the whole story here is still, it has nothing to do with, oh, EVs are bad. No, educate the people that will rent your cars and you'll have fewer incidents. Then one of the last things, fortunately, negative news, and that was this one. So Tesla's Berlin planned to stop most output for 2 weeks due to Red Sea disruption, of course, with the terrorists in Yemen. The automaker said the suspension would last from January 29 to February 11. Maybe they'll use that time to do some upgrades there or not, remains to be seen. But then again, Giga Berlin, when you look at the global Tesla output, is still quite a small chunk. Still, not that great of a news. But oh well, could have been worse. Now, moving to the end part of this video. If we look at the stock right now, yes, we can see there is a lot of pressure on the stock. This is the 4th red week for Tesla, which means, of course, we're under the 200-day moving average. RSI is low-ish neutral. Of course, this is on the weekly. On the daily, RSI is much lower. Still not oversold, but we are getting there. Now, on the weekly, we can see this was an area that I drew quite a long time ago. We are getting quite close to that first, let's say, support line right here at $215. If not, there is this whole range between $200 and $215, and this is exactly where I have some buy orders set. Now, of course, a lot of things can change after the earnings report and until then as well. But the last time we had 4 red candles on the weekly was quite a while ago. It was back in February 2021, so close to 3 years ago. And back then we saw a rebound at, you guessed it, $200. Yes, it went a bit lower, but the $200 here is the support line. Could the same thing happen yet again? It could. Again, we've seen this in the past. Round numbers somehow get respected a lot. But I'll repeat myself again and again so it is extremely clear. Earnings report, earnings call especially, can decide whether or not we are going lower. If suddenly that earnings call is again filled with negatives, company specific or macro, then yes, that could put even more pressure on already a pressured stock, because the momentum right now is definitely not with Tesla the stock. Tesla the business could continue to do very well, but since this is dealing with stocks, Tesla the stock right now does not have momentum. All of it can change. In my opinion, buy opportunities will present themselves. If the business is doing quite well, I'll take that opportunity with both hands. So that will be it for this video. If you enjoy this type of videos, leave it a thumbs up. Of course, do share your thoughts down in the comments below, negative or positive. I don't mind, and I see you all in the next one. Bye-bye.